Okay, welcome everyone. This is Scott here again with a new video to help you learn how to trade, invest, and master your finances so you can apply that knowledge in the real world and multiply your money. And today's video is video 6 of my live option trading series, and unfortunately, it's been another pretty bad week. Right, this is just one of those rare moments where every single one of my positions is going against me in a pretty significant way. And this is what's known as sequencing risk, right? Because generally speaking, when you sell out of the money options, most of the time, the majority of your positions should be working in your favor. But there will definitely be times where the probabilities play out such that the majority of your positions, or all of them, go against you at the same time. And this can last for maybe a few days, or it can last for a few weeks. And so, as I've said many times in my other YouTube videos, and I'll reiterate again here, it is so crucially important to keep your trade size in check, specifically keeping your trade size small. Right? Because when you look at all these positions, even though it appears like a pretty big disaster, and overall I'm down by about $2,300, that's only about 4% of my account. And losing 4% is pretty much expected at some point. You're going to have ups and downs, great weeks and bad weeks, and so fluctuations like this are just a normal part of the game. So I will talk about these positions a bit more, but first I do want to show you the one clip from earlier this week where I did make a new trade on MRK. This was a pretty light week. I didn't make a lot of new trades, mostly because I had my hands pretty full already. Now, as always, before we get started here, for those of you who are new to the channel, I just want to let you know that I do also teach on Skillshare, where you can take my very in-depth classes on options trading and stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out. And when you sign up for Skillshare using any of those links, you'll get a 2-week free trial. So with that said, I'll stop here and I'll play that clip. Okay, so today is Monday, June 1st, and as you can see right here, my 2 naked put options on CLF just came off for profits this morning. And if you recall, if I come back to the charts real quick and take a look at CLF, this was the stock where I noted this trend line right here. And once CLF got down and hit that trend line once more, that's when I sold those naked put options. And looks like I was correct. This trend line held once more and CLF bounced off that and went higher. So that's great, and now I can reuse that capital that was locked up in this position and redeploy it for a new position. And so now I'm looking at MRK. This is Merck Co Incorporated. It's basically a healthcare company, and as you can see down here with the implied volatility, we are seeing a pretty massive spike this morning. Right, the IV rank is 43%, IV percentile 62%. The IV itself is pretty low at only 27% overall. This is not a very volatile stock, but still, I would like to take advantage of this increased implied volatility because I was searching my market watch list and I could not come across a stock that I was bullish on, at least in the short term, that also had high implied volatility. And moreover, given that the stock has sold off pretty significantly in the past few days, and now if I zoom in here, it has hit a pretty significant support level. And actually, I'll go to the drawings and I'll draw the support level for you. So I'll go to trend line, and I can just click right here and drag it on over. So now you can see this red line is a pretty significant support level, and many times in the past, MRK touched that point and bounced off it, came back down, touched that support level once more, bounced right off it, came down again, actually broke through it for a short time, and this can certainly happen, but it still bounced right back up, and now finally once more it's coming back down. And actually, if I change my drawing to real quick, let's go to this arrow so I can zoom in more. You can see this morning, MRK literally just touched the support level once more and then immediately backed off it again. So in my view, this is a good sign that the support level might hold again, in which case I'm definitely very keen to sell some naked put options on the stock right now. So we'll go over to the trade tab, and I'll be looking in the July expiration cycle with 45 days left to go. And so given that the implied volatility for this stock overall is not very high, these options, both for the put options and the calls, are not very expensive. So that is the one downside of this particular stock. I might have to sell 2 contracts just so I can collect a decent amount of premium. But again, this was the only stock I could find where there was a very recent sell-off down to a support level, and also there is high IV rank and IV percentile. So even though the implied volatility of 27% for the stock right now is pretty low generally speaking, it's still very high for this particular stock. And that's what really matters. So I'm definitely leaning in favor of selling 2 of these 75 strike put options here for about $200 a piece. So In total, that should be around 400 bucks in credit, a little bit less, but just rounding up. And also double check two things. One, this stock is easy to borrow. So if I do need to short the stock as a hedge, it should not be too difficult to do so. And then also if we come to the Analyze tab and go to Earnings, and I already have MRK pulled up here, the next earnings date is July 29th, which is after the July expiration cycle, and that's great. Unless I'm specifically playing an earnings announcement, I don't like to have earnings to come up somewhere in the expiration cycle. So everything checks out here. So I'll click on the bid price for these put options. And also one more important thing is to make sure that the options you're trading are very liquid, meaning the volume is high and also the open interest. So you can see for both the put options and also the call options, the open interest is already in the thousands, and the volume for some of these near at the money options are already in the hundreds. That's very good liquidity. And because of that, that's why the bid and ask prices are pretty tight for these options. Right, the bid for these 75 strike put options are 192, the asking is 197, so right in between I'll set the limit price to be 195, and I'll set this as 2 contracts here. Go to confirm and send. Take a look at the buying power effect. It's 2,900 bucks, which is definitely a bit high, but it's not crazy. It's a bit over 5% of my account value, so it is pushing it a little bit, but I'm still okay with it. And then we'll go to send. And there we go, just got filled on both contracts at 195. Great. So let's come back to the monitor tab real quick, and I'll move this new trade to the appropriate group. So MRK, right click on that, move to group. This is going to be naked put options, and there we go. So now I have 2 naked put option positions on currently. Like I said, my CLF one just came off this morning, so the quantity of these contracts are all 0. So this will disappear come tomorrow morning. But I really wanted to have another naked put option position to replace my CLF position because I have a lot of negative delta on for my other positions as well, which means all my other positions are bearish. I'm bearish on Virgin Galactic, bearish on Roblox, bearish on Palantir, and so I like to balance out my entire portfolio by also having some bullish positions on at the same time. Right now you can see for MRK, the delta for this one position is almost 7. So that's definitely going to help neutralize these negative deltas for my other positions. Okay, welcome back. I hope you enjoyed that clip on my MRK trade, which unfortunately is also turning into a bit of a dumpster fire, but it's moved against me for a very odd and not necessarily a bad reason. And so if I come over here, I found this document on the day that MRK moved against me in a very significant way. And if I scroll down, you can see that Merck Co has announced a distribution of new Organon & Company common shares. The distribution ratio is 0.1 of an OGN share for each MRK share held. And so June 3rd was the ex-distribution date for this distribution. And this was the day that MRK dropped by a pretty significant amount, which obviously hurt my short puts. But like I said, this was the reason for that happening. Now, I've never seen this happen before, so I will need to do some research to learn more about this kind of event. Because also, if I come back to thinkorswim, and let's go to the option chain real quick, and we'll go to MRK. You can see now there's a whole plethora of new expiration cycles with different kinds of option contracts. Right? Originally, the options I sold were regular monthly contracts in the July expiration cycle, but because of this event, my contracts actually got moved to this expiration cycle, which does have the same expiration date, but now all these contracts represent either 100 common shares or 10 of these OGN shares. So again, still not 100% sure what exactly all this means, but it's still not a big deal because my contracts are still well out of the money. MRK has rallied quite a bit since this event happened, and so at this point, I'm just going to wait it out. There's no adjustments I need to make. I don't need to short any stock. It's just a waiting game at this point, at least for now. So pretty bizarre, but I'm glad it happened because it certainly could happen again. And next time I will be more aware of what that kind of event actually means. And so let's come back to the monitor tab again. And so you can see Virgin Galactic or SPCE is still giving me a hard time. Right, this stock really has not sold off at all since it had that massive rally. It's just been kind of bouncing around this price range for the past few days. But I have not made any other adjustments to this trade. I've just been waiting, letting time decay and implied volatility contraction work in my favor. And hopefully this stock is about to turn over. That would certainly be ideal. But of course, we'll have to wait and see. Now, TAL is definitely the worst position I have on at the moment. Overall, I'm currently down by just over $1,000. That's because over the past few days, this stock has sold off almost 10% a day. Right, if I zoom in here, Boom, 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 boom. It's been an absolutely relentless downturn and literally about 10% a day. And along with that, we're seeing an even greater expansion of implied volatility. But of course, I was prepared for this kind of thing to happen if it ever did. And so this morning, I did go ahead and short 50 shares of TAL stock just to apply some brakes on some of the losses here. And so if it just keeps going lower and lower and lower, then I'll short more and more shares until I have the entire position fully covered. And one thing I do want to say and point out here is that the vast majority of these losses are all just extrinsic value of the contracts, right? If Virgin Galactic, for example, were to expire by July 16th, if come that expiration day, if Virgin Galactic were to be at the same price where it is right now, I would actually break even on this trade. For MRK, it would be a totally profitable trade. For TAL, I would lose about $500, not $1,000. For Roblox, I would actually be fully profitable if the stock expired where it is right now, which I believe is at $101 per share. And my short call is at 110, the 110 strike, and my short put is at 70. So both of these options are still out of the money, but because there is still some decent amount of time left until the expiration date, these options still have a lot of extrinsic value baked in. And that is the main culprit for these losses, like I said. So if you are pursuing an option selling approach like myself, then just keep that in mind, right? Oftentimes the losses look a lot worse than they actually will be by the expiration date, because by expiration, all contracts will have no extrinsic value. And as a seller of options, as that extrinsic value slowly gets eaten away, that's going to make profits for you or to help offset losses, either case. And one other trade I do want to mention, which I was not able to record this week, was my day trade, if you want to call it, on Bed Bath & Beyond. Right, this is another meme stock just like AMC or GameStop or Virgin Galactic, BlackBerry, etc., that participated in this pretty massive short squeeze earlier this week along with AMC. Right, AMC was the main event. And so it's pretty obvious when one meme stock goes up to the moon, then the other ones follow in suit. So I did not want to trade AMC because it was the star of the show. It literally doubled in price in one day. And also, this stock is hard to borrow. But with Bed Bath & Beyond, this stock is easy to borrow. And it did not participate in this little short squeeze nearly as much. So still a pretty risky trade. But what I did here is yesterday on Thursday, I sold an out-of-the-money call option at the, I believe, the 45 strike right here. I'll zoom in a bit. So I sold the 45 strike call option kind of late in the morning as Bed Bath & Beyond was selling off throughout the whole day yesterday. And I was prepared to potentially have to hold that trade all the way to the expiration date, but ideally, I did not want to hold it overnight. So I did get a bit lucky when I sold this call option. Bed Bath & Beyond continued to move even lower, and also implied volatility did contract a little bit. So with those two things combined, the value of that call option dropped by about 25% just in that one day, and I took the position off. So that was a pretty quick $120 profit right there. And so I am thinking about trading the stock again today, and probably for a more long-term trade, because I do like the fact that Bed Bath & Beyond is still coming down a second day in a row. We're also seeing implied volatility starting to contract. So perhaps this could be an early sign that this little short squeeze is coming to an end. Also, if we go to AMC today, AMC, right, this stock is up by literally 34 cents, basically unchanged. Still no way I'm going to trade this stock. It's just way too risky for me, but Bed Bath & Beyond, potentially. So let's come to the Analyze tab first. I do want to see when earnings are for this stock. It does have earnings on July 7th, and today is June 4th, so still about a little over 1 month away. And generally, I do like to avoid earnings at all costs, unless I'm specifically playing an earnings announcement, but at the same time, this is a very rare opportunity. Right, the implied volatility for Bed Bath & Beyond is 132%. So the IV percentile is at 88%. The IV rank is a bit low because back when the main short squeeze happened, the IV definitely got a lot higher, almost to 300%. But all short squeezes do come to an end. Right, you can see the stock peaked and then came down pretty much every day in a row, back down to a normal price. So potentially that's again what's happening here. And because the IV is so high, I can sell my options very, very far away and still collect a pretty decent credit. So let's go to the trade tab here and take a look. So perhaps again, I'm thinking about selling the 45 strike call option, but along with this, I might want to sell a put option as well and make this a bearish skewed strangle. So I'm thinking perhaps the 23 strike put option, right? Because if you come back to the charts, let's zoom in a bit here. The 23 strike for the put side is right around here. So it's below this entire range for the past few months. And 45 is above, just barely, above the peak of this massive push higher. So like I said, a very, very wide range for the stock to move around. And again, it's because the implied volatility is so high currently. But if indeed this short squeeze is coming to an end, I would expect the implied volatility to drop drastically, maybe even get cut in half over the next few days and weeks. And that alone would allow me to take off this strangle for a very nice profit. And then of course, if the short squeeze is not over and come Monday, the stock is at 55, then that'll be a different story. Which is why I'm going to keep my trade size small. I'm just going to sell one contract, one call, one put, so that if I'm wrong and if Bed Bath & Beyond continues to actually push higher after this little pullback, then I can just buy shares of the stock, cover that naked call option, and keep my losses in check. So let's come back to the trade tab one more time. Let me go ahead and set up the strangle to see what the credit looks like. So strangle, scroll down a little bit. So 45 strike call option and the 23 strike put option. And I would collect about $360 in total credit for this one strangle. And you can see the put option has a 16 delta. The call option has a 30 delta. So the total combined delta for this whole strangle is 14. So this would be a moderately skewed bearish strangle. And so let's go ahead and lock in this price here. I'll come down to 360 actually. Go to confirm and send. Check the buying power, $1,300. That's fine. And then we'll go to send. And so we did not get filled yet. Let's come back to the monitor tab. And then Bed Bath & Beyond should be way up here. Okay, so the marked price actually dropped pretty significantly. Let me actually come back to the trade tab and take a look at the volume and open interest for these contracts. So the volume today is not great, but the open interest is still 1,300. That's fine. Volume here, 88. Open interest, 5,200. That's fine. So these options are still plenty liquid, but sometimes you can actually change the mark price of this entire strangle just with your one order. And that can happen when the volume is not super high and also the bid and ask prices are a bit wide. But this is still fine with me, so let's come back and I'll go to cancel and replace. So the current price, the marked price is 353. I'll go down to 352, confirm and send, and still not filled. Okay, so at this point, I'm going to sit on this order for a few minutes, and then I will slowly walk the price down if I need to. And also one last thing before I wrap up here, I do want to point out that both Stitch Fix and also Marvel Technology do have earnings after the market close on Monday, next Monday, which would be June 7th. And both these stocks are exhibiting very high implied volatility. That's why they're at the top of my watch list. So if they maintain their high IV ranks and IV percentiles by Monday, then I definitely want to play either one or perhaps both of these trades here. And there we go, actually. Just got filled in my Bed Bath & Beyond at 352. Very nice. So definitely keep these two stocks in mind, because if you also want to play their earnings announcements, then given that both of these stocks are pretty cheap, Stitch Fix is at 55, Marvel's at 48, these would both be great candidates for a strangle or a straddle or any form of undefined risk strategy come their Monday earnings announcements. So with that being said, that's going to wrap it up for this video. I hope you enjoyed it. And please let me know your thoughts or if you got questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading and stock market investing, then check out those Skillshare courses. Links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every Monday, Wednesday, and Friday, and you don't want to miss out. So thanks again for watching, and I'll see you next time.